way our parents and grandparents retired is vastly different from what we've got today. Most of them had a pension if they worked at a company for a really long time, and when they retired from that company, they got that pension, which basically guaranteed them income payments for the rest of their lives. But now with the amount of companies out there that offer pension going down and down and down, and the last figures I saw was it's actually down into the single digits of companies as far as percentage of companies that still offer pensions. What can you do? How can you guarantee that you have a lifetime income when pensions are just basically a dying breed? How can you have a safe retirement plan in a pensionless world? First, if you don't already have a copy of my book, Safe Money Retirement, Your Game Plan for Success, you owe it to yourself to get a copy. We will send you one absolutely free, no charge, no obligation. It's going to explain exactly what I'm going to talk about real quick right now, but it's going to go into depth about how these plans work and how you can basically create your own pension. We'll send you a copy absolutely free. Just log on to our website, safemoneyretirement.com, or give us a call anytime, 833-413-SAFE. All right, now, again, when we were younger, and we were looking at how our parents and grandparents retired, a lot of them had pensions. They basically would work for one company forever, for a long time, which that's one thing that doesn't happen much anymore, but that's another subject. But they would work for one company for a long time, and then when they retired, they would get a pension from that company that would guarantee them a set amount of money for the rest of their lives. So what can you do to basically get kind of that same effect in a retirement when you don't have a pension from your current company? Well, first I want to talk real quick about the differences between now and how things used to be. So for those of you that are watching the video version of this segment, you can see this is how things used to be. You can see it right here below me. In the past, what we're looking at is we're actually looking at a pyramid, and the base of the pyramid, by far the biggest for people in the past, how they were planning their retirement, was their pension. So the most was the pension. And then on top of that is Social Security, that along with the pension. And then the very top of the pyramid, which is the smallest part, is the nest egg. Well, what's happened now, and actually for those of you that are listening to the audio, what I'm showing is actually a slide out of the Don't Worry, Retire Happy webinar that we do every single Thursday. You can register for that right on our website, safemoneyretirement.com. But now the pyramid is literally inverted, where now the nest egg is on top in the biggest part, Social Security is in the middle, and pension is at the bottom, because if you do have one, it's probably pretty small, and most of you listening don't have one. So again, what can you do to basically overcome this flip-flop of the way things used to be? Well, what you can do is there are plans out there. Y'all hear me talk about them all the time. There are plans out there that you can deposit a lump sum, or that you can start with a smaller lump sum and keep dumping money into, and in the future, or it could start immediately, but at some point in the future then, that's going to start paying you a guaranteed lifetime stream of income you can never, ever, ever outlive. So that's one of the things that we want to look at is essentially what you're doing is you're creating your own pension. So companies may not offer it, but companies may offer a 401k or a 403b if you work for a government agency, or a TSP, or you may have an IRA, or whatever your money, your invested money is in. You can take some or however much of that you decide you want to do, and you can move that into a guaranteed lifetime income annuity with a top-rated life insurance company. And what that's going to do is essentially that's going to mimic how a pension worked. This is how you can retire in a pensionless world as if you had a pension. So let's just take an example. Let's say you had $500,000 in an IRA. Well, what we would do is we would sit down, and that's one of the reasons I do a full fact finder with my clients. We don't just jump into things. We're going to look and see, okay, where are your expenses at now? Okay, where is your income at now? What's your income going to be at Social Security? And determine when we're going to turn that on. And then the first thing we want to do is make sure you're going to have enough income at retirement to cover your basic expenses. So that's the first plan we're going to do. We're going to put you into a plan that, along with Social Security and any pensions, if you've got any, will get you enough to guarantee that you've got enough of a paycheck when you retire to cover your expenses. That's step one. But now we need to make this inflation proof. And the way that we can do that is we can add on some additional policies that just continue to grow and continue to grow and continue to grow. And you can turn them on at some point in the future, and they're just going to continue to grow until you turn them on. But you can start them with a relatively small amount because you've already know you've got most of your expenses covered with the initial product that we do. So what you need something that if, inflation, the COLA on Social Security doesn't cover inflation enough, or you get extra bills or whatever, and you need just a little bit more, you can turn one of those plans on. And then, 5-10 years after that, you need a little bit more, you can turn another of those plans on. That is how you can have a pension-like retirement in a pensionless world, is by essentially creating your own personal pension by taking, usually most people just take a lump sum out of what they've saved. Like I said, 401, IRA, doesn't matter where it's coming from. Those are all the same type of plans. Can be Roth, can be non-qualified, can just come from a checking account, after tax type of account. Doesn't matter where the money's coming from. And that's one of the things that we would determine in the fact finder appointment, is determining exactly what's going to make the most sense as far as where the money's coming from and how we're going to do it and all that kind of stuff. But basically, get the money moved over. There will be no tax consequence to you once the money is moved. You won't have to worry about any of the taxes until you're taking the money out. If there are taxes, of course, if it's a Roth or non-qualified, non-qualified will have very minimal taxes. Roth won't have any as long as it's been open for 5 years. Again, that's something that we can discuss on each individual person to find out what's going to be best for you specifically. But essentially, we're taking money out of a current plan where it is, especially if it's in an at-risk account. Because remember, everything we do here at Safe Money Retirement has no chance of losses, period. No matter what happens in the market. There's no market event that can make any product that we offer at Safe Money Retirement lose a penny. That's a fact, because everything we do is fixed. We also are independent, so we'll show you all of your options. So we'll sit down, we'll figure out exactly what you need to do, put you in the best plan, and essentially allow you to have a pension like your parents, grandparents, great-grandparents had, but be able to do that in today's current age and know you've got enough, and we can set it up to where it has 100% survivorship for your spouse. So when you pass, your spouse still gets the same amount. This is what I'm talking about. This is how you can guarantee a safe money retirement for yourself, and how you can really enjoy your retirement in a pensionless world.
The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or in a death benefit unless specified in the annuity contract. Fees may apply. Guarantees are based on the financial strength and claims-paying ability of the insurance company. No information presented today should be acted upon without meeting with a qualified and licensed professional. Obviously, by calling us now, you are just taking the first step towards protecting your retirement. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program are subject to change without notice.